Eric Burns is a Cincinnati entrepreneur who evolved from finance major to firefighter to real estate investor. Now, starting with residential flips, he transitioned to commercial real estate after realizing trading time for money wouldn't create true freedom. His 2016 student housing rental marked the beginning, leading to renovations, and after years of failing forward, commercial investments. Through Flowers Capital, he prioritizes passive income, capital preservation, and time freedom for investors. A lifelong learner driven by curiosity and resilience, Eric champions commercial real estate as the fastest path to wealth. His message to fellow entrepreneurs is simple: stop trading your time for money and live life bullish. When not analyzing deals, he enjoys fly fishing, travel, and his Labrador, Baron. Eric, we're glad you're here, man. Welcome.
Hey,
Welcome,
hey
welcome.
guys, thanks for having me on. I appreciate the nice intro too. Thank you.
Definitely.
It's good to have you, man. I'm gonna run off with our first funny icebreaker here. I'm sure Eric and Emmy will chime in as well. But I've got one. I came across this today and asked all my kids this because I thought it was so funny. Would you rather fight 100 duck-sized horses or one horse-sized duck?
Ooh, I'm gonna go a horse-sized duck. I think
No way.
it has to be because I feel like 100 horses would be overwhelming at any size.
Okay. Well, it's funny because every one of my kids answered that same way, and I was like, "Man, if you're
Really?
fighting to the death, I would rather try to
100 horses.
I could break a couple of necks if they're real small, like
just
chickens
kick,
running around.
you know?
Yeah.
Woof.
But man, I don't want to know what
Get
a
a
duck
stick
the
and just-
size of a horse. Woof. Yeah.
I
was
feel
worried.
like I'd rather worry about one giant bill than
Okay.
like
Oh yeah,
what
okay.
a,
Bazillion.
400
That's
hoofs.
That
fair.
makes sense.
That's fair. Okay.
I like it.
Yeah.
Oh
So,
gosh.
continuing the interesting icebreaker trend, if you could replace all the grass in the world with something else, what would it be?
Ooh, my initial gut reaction would be let's just turn the whole country into a nice beach.
Yes.
But,
Okay.
Yeah, I think we'd miss the green, so let's go that nice astroturf they do the fields with now that looks like grass. Fake grass.
There you go.
Let's go fake
Yeah.
grass.
Fake grass.
Awesome.
Nice. Eric, I didn't know. I have another one. I was kind of curious. If you could only communicate for the rest of your life in movie quotes, what movie would you want to borrow from to do that?
Oh, 100% Big Lebowski.
Oh, there it is.
It's gotta be for me.
That's great.
I'm assuming we're all in agreement on that, right?
I like that. I think that's a
I'm
good
good
one
with
for
it.
quotes.
Yeah,
Yep. That's solid. I had never had a White Russian until I watched that movie.
Oh,
I
I've
didn't even
never
know what
heard
the-
of them. Yeah,
Didn't know what the
Yeah, it was a
cocktail
trend.
was. And then I was like, oh, okay, that sounds cool. That's actually a pretty good cocktail. I was like, I could see why he
Not
was
bad.
powering through them the whole way through.
Yeah. The dude abides.
It's good stuff. Good stuff. All right, well, I'm ready whenever you guys are, unless you got some funny questions.
Let's go. Let's go.
Let's
Dive
do
into
it. So, just starting off, Eric, I'd love to know Eric Yemi was reading in your bio that you started off in residential real estate initially. So I'm curious because I know a lot of people that do more on the residential side. I was curious, what was kind of a pivotal moment for you going from residential and into the commercial space for real estate? Tell me a little bit about that and
Absolutely.
what happened there.
So I was actually on the fire department when I bought my first rental property, and I just bought it as a side hustle. The guys at the kitchen table kind of agreed with me, and I went for it. I learned how to be a landlord, and it was during my time in residential that I just kept evolving into something a little bit, a lot of times riskier and bigger, but also a little more ambitious. So I went from doing the residential rental, and then I started renovating duplexes and keeping them as rentals and kind of forcing some equity there. And what I thought was going to take off, because real estate is such a great product, especially with a W-2, even though we had that a nice schedule, I was really mid renovation on one of these properties, and I was just, it kind of hit me like a ton of bricks that I still was only trading my time for money. And truthfully, I did the math, and I was really kind of defeated in that day. And I did the math, and I thought my hourly wage right now is like half of what my first job was. And I'm like doing the math in my head. I'm like, I should just go back to my high school job and work that. And I'm no spring chicken, so we're talking 20 something years ago salary. So
Gosh.
it was just really that realization that and I had already kind of been leaning into that and exploring that topic. So I kind of had it on my mind, and then I knew it was kind of time. Let's really see what digging into this commercial stuff looks like. And I read a couple books to start me off, and then when I realized that about all the benefits that commercial did offer, it was just another moment in my kind of journey where I said, let's go for it, see what happens. And so that's kind of how I landed there. I just kind of realized I still was never going to get that freedom of time, and then to be able to scale and do it passively is just such a neat option. And so that's kind of how I like to kind of describe that journey, is just kind of one of the one step after another, and that's kind of where I landed. And thankfully, I have a product that I really enjoy, and makes it a fun deal, fun
I have
trade.
a question. How long did it take you to get your first property? Like, because if you're working at the fire department, I don't know how much that pays, but how long did that take? Was it like really, really risky for you looking back on it in terms of a make it or break it type of decision? Like, how did you get to that point of, of being able to actually invest into a second property or a property?
It didn't take me but a few months to find it, if I remember correctly. It was pretty quick, so I didn't have time to second guess myself, which is good. And I didn't get into analysis paralysis. I did what, looking back, was probably way too rough of numbers, but they worked out because I bought well. And the way it happened, as soon as I made the decision, and this was a really good response rate, where I hand typed hundreds of letters, stamped them, and did all that myself. And I got one off market for it, and it was in a trust that they were just trying to liquidate. So I just lucked out
Wow.
into one, and so when it was time to make that leap into residential real estate and buy a rental property, I leveraged quite a bit to do it, but it happened really quick. So I had whatever money I had saved and whatever money I had in stocks. It was just kind of let's go for it moment, and I just did it.
So you already
Nice.
you already had some savings, you had some stocks, you already had some kind of foundation. Is that what you're
Hmm.
saying?
Yeah.
So would you recommend that okay, so basically, like, if someone wants to get into this, who doesn't have stocks, who's maybe living paycheck to paycheck, what would you say to that person on how they could get into this? How they could
Okay.
make their life better.
Yeah, so a lot of people do start residential investments, and then they scale into the larger sums that it would take to buy into a syndication, and they vary quite a bit depending on the deal and the sponsors and operators and all that. But there's some really neat tactics out there. One of them that I love is house hacking. So you get to take advantage of the lower down payment on a house, but you buy a duplex 2 family, and you rent half of it, and above and beyond what your mortgage is, so
Makes
you
sense.
cash
Yep.
flow a little bit every month. And then from there you can evolve into house hacking every 2 years. And I know a lot of young guys have started like that, and not a lot of new real estate investors have started like that. And I think that's always a good place to start your evolution. And and I think it's also a commitment to a lifestyle. Being a landlord is, at a certain point, just not that fun. So to have an end game in mind is always beneficial. So like I always, you're buying a job, and you're really buying a lifestyle where you do have to take calls after hours, and you might have to go make a repair. That every repair you make, it could be 20 minutes, and it's a 2 hour job because you spend an hour and a half at Home Depot, a 10-minute drive, a 10-minute drive for a 10-minute job.
Yeah.
So, and it just understanding what you're getting into is really important. And to evolve from there, and when you start to get into the $50,000 savings range, then you can really start looking into jumping into commercial and start transitioning into being a passive investor, and just really understanding how to run properties in general makes evaluating a deal even easier, because you can understand what the business plan is supposed to look like. And that was one thing I walked away in my
Mm.
residential time with the skill set, that I could evaluate renovation budgets and rent increases, and it was a really good foundation. And so, having started in residential, where my evolution is really what mattered, and the skills I gained during my time doing properties, duplexes, and renovations were skills that made the transition for me into being a capital raiser. And before that, I was doing some operating stuff, sourcing deals and GPs, which is a whole nother story why I niched down. But when I was looking to create general partnerships, I had one going, one fell through. But at that point, I knew I could leverage my skill set better as a capital raiser. So,
Yeah.
but being able to go in with that background is a big part of my story. So I really could have looked back and said, if I had, and I don't, I had not enough quite to go passive right away, but I was close. And I could look back and say, well, I wish I would have gone passive right off the bat. And in a lot of ways, that would have been more lucrative. But in the grand scheme of my path, I value that skill set so much
Mm.
that
Hmm.
I can't say that I would have done anything different. But if someone does not want to buy that lifestyle and buy that job, even though it can be lucrative, taking that down payment of $50,000, which would buy you a really nice property without having to renovate, and like around the Midwest area, and putting it into a passive investment is a really great option for people, because they just don't have time. And to
Mm.
build wealth and net worth without having to spend your time doing it, and being able to compound your returns, is really what gives that net worth a big boost, and where you can really start getting out there and living life bullish, like I like to say. But and by that I mean experiences, spending your time, either even if it's back into your company in the areas where you excel, to expand your own company or something like that. But really being able to have the time, flexibility, and means to collect experiences with people that you love, and do things that fulfill you, and things like that. And so that's why passive income for me is so appealing, but it's why it's so energizing as well. So it's kind of
Yeah.
like,
True.
What what is obviously in residential you have different types of residential, right? Single, multifamily. You talked to duplexes. What are the variants in the commercial side, and is there a particular like category of commercial real estate that you are particularly keen on, and why? Walk me through some of that because I'd be curious. So again, as
mhm.
someone who doesn't know much about the
I
commercial
would also ask
landscape,
too, added on to that, are you recommending that someone new should go into residential just to get that bottom line
skill
experience
set.
and then move into corporate type things, or like just added on to that question?
Okay, yeah. Let me start with that, and then I'll kind of try to evolve into the second half. I think my recommendation is just understand where you want to end up, understand what you're getting into, and if your $50,000 investment looks way far off, then going and learning the skills in residential. It's always better to get into any type of real estate sooner than later, and
Hmm.
I think that is a fact. So,
Okay.
I mean, I think that's a fact in my book. I don't know what the stats are. Don't quote me. At any rate, so I think it depends on every situation. Will you have the means, and when will you have the means to make a $50,000 investment and go passive? And if it's a ways off, then why not start building equity in buildings, and starting at a smaller scale? And if you start in the two families, it's not long before you can kind of get enough cash flow going, and you can start looking into commercial properties, which would start at 5 units and above. And where I mainly operate right now is in multifamily and larger units. We actually just closed a deal in Phoenix with 71 units, so
Mm.
somewhere around that range. But even up into 150 units, I partner with the sponsors and I bring investors to the deal, and so I help raise money, and that's mainly because my network is so potent that
Mm.
I was able to leverage my skills in a better way to work on better deals and better operators
Mm-hmm.
than I
Mm-hmm.
actually was.
Yeah.
Mm-hmm.
So that
Yep.
was a no brainer. And the reason I'm
Nice.
actually kind of dialed back down into multifamily, and there are other asset classes that we do like. We have operators that we like in other asset classes and things like that. But right now, it has been hard to raise money from investors, frankly. And the
Mm,
feedback that I get the most is it's mainly market sentiment, and
yeah.
rightfully so, and
Mm.
rightfully so. So and just decreased sales volume, the last year especially has been rough. So I kind of made the decision that I would be able, just understood, I will be able to raise less money right now, and and so I kind of dialed back to my bread and butter, so I make sure I can fulfill a commitment or do my best commitment and come through rather than be spread thin. And so that's what's caused me to go into multifamily heavy again, and that'll remain my bread and butter for the foreseeable future. And a lot of reasons, there's still really good demand drivers. A lot of markets are still growing and outpacing supply,
True.
things like
Mm-hmm.
that. So there's a lot of reasons to still really like multifamily. And like I said, that's where it's my bread and butter because that's my strongest skill set. It translates into multifamily, so it's in my comfort zone quite a bit. And when I
So
start getting into like mobile home park developments, it gets a little trickier because I can understand the deal, but it's just not as intuitive as it is now for me to underwrite a multifamily because it's just a giant version of a duplex, really.
okay. So would you say that as far as multifamily goes, your strength is in not only putting together the, obviously investing, in the syndication, but really finding the partners for that syndication. So your
Hmm.
strength is not only just finding the deals, but finding the people who can invest in the deals, which allows you access to bigger deals.
Absolutely, yeah. So it
High
allows me
quality
access to
stuff.
better deals, and it actually breaks barriers to entry for myself and to the investors that come with me because
Sure. Yeah.
and Phoenix is a great example where I in Cincinnati could not go jump into the market of Phoenix, Arizona, and that
Mm-hmm.
MSA because there are too many prohibiting factors for me to take advantage of that. It is a fabulous market still for many reasons, and it gives me the chance to go to these markets and and the way I leverage operators and well partner with operators is that most of them I know organically through masterminds or events, and
Mm.
I've gotten to know them on a personal level, and then I kind of get into what their product is, and then we'll start looking at deals. So when I and the reason I went from putting together general partnerships is all of a sudden I look around and I'm surrounded by great operators with great deals, and they're saying, "Hey, would you like to raise money?" And my obvious answer was, "Yeah, I'll raise money for you guys. You're better at this than me." And so that's another reason why I go that route is because my network became so potent just by
Yeah.
doing legwork and trying to make connections and just understanding what I'm looking for in a sponsor. And I start sponsor down. So I look in what sponsor am I looking at? What market are they in? And what's the deal look like? Kind of in that order.
For our audience, could you explain what a operator is and what a sponsor is,
Okay, yeah. So
and how
most
you leverage
generally,
those?
so they're basically the same thing. They're just interchangeable terms for the most part. A sponsor is going to generally operate the deal. They might choose that version of nomenclature over an operator because it indicates that the, it kind of insinuates that they have less control over the deal, but it's not that's not really the case. They really are hands on, making sure the business plan is executed. They might use maybe another third party management company. An operator may be more vertically integrated with their own systems, but most good operators and sponsors are going to be systematized, and if they're using third party management, generally it's going to be a company they've used over and over again. Same with general contractors. But
Okay.
when you're just jumping in, you'll hear the terms used interchangeably.
Thank you for
When you
that.
say yeah, when you say great deal, give me some markers. Like if you're evaluating
Yeah.
a deal, what is oh this is what I'm looking for. Boom, boom, boom. Here are my top like a few things that it needs to check off these on the list.
Mm-hmm.
And
Yeah.
to add on to that, um how do you kind of source those deals, especially with the markets and everything fluctuating and everything? Does that play a part in this, or you just like, you know, buy down, buy up, and it doesn't really matter because you're going to get paid off either way?
Mm-hmm. So good sponsors, good operators that are bringing deals to the table, they're usually getting better debt terms, and they're usually
Mm,
getting a lot of looks from brokers before someone like me would get them because
Mm,
they have such established relationships and because they can close deals.
mhm.
And
makes sense.
they may be a little off in price, but it's a deal they know they can close,
Mm,
and there's no risk of falling out. There's less risk of the deal falling apart before you get the contract, which usually takes a number of months because there's really intricate due diligence and things like that. So the deals take longer to close. So that's where I get the deals from. And then what I look for in deals really is what I like to see in the business plan is that it's a lower execution risk, that that everything that's underwritten in the biggest levers are going to be exit cap rates and it's going to be the rent increase. And so if there's a rent increase right now that is up into the 3%, then then my flags go up and say, well, is there a reason that we can justify
mm,
this?
mhm.
One of the things I liked about the last deal we closed, we had 0% rent growth in year one, and we already beat it, and we've only owned the property for a month now. You know what I mean? So,
Mhm.
but
Wow.
to be able to justify a 3% increase, yeah, year one we're at peak supply. We're not going to increase rent or plan on it.
Yeah.
Now, when you're talking about a market that has such good employer base, and a great example of that is a $65 billion investment in a microchip factory, and then 2 weeks after we closed the deal, they announced another 100 billion they're putting into it, and that's on top of all the other businesses that are being attracted to Phoenix. So 3% in year 2 to 5, you've already got a 0%. That's a good
Mm,
example
Yeah.
of what I like in underwriting because yeah, that's a very believable increase because of all these demand drivers. Now, is that same rent increase justifiable in Cincinnati? I don't know 100% where it's at right now, but probably not.
Mhm.
So that's what I look for in deals. Generally, the sponsors are going to come with great deals, and they're going to be great deals because they're going to be in really good markets. So to understand the markets that I'm operating in really helps me evaluate the deal, and the business plan is a huge part of it. So I've already vetted the operators I'm going in with, and then the markets are generally going to check out, and then what I'm really wanting to know, in addition to the underwriting, is does this business plan look like it's going to go smoothly? Are the
mm,
renovation budgets high enough? Are the timelines in order? Is this going to be a heavy value add? And are the reserves being accounted for? To understand what the business plan is looking like and evaluate, is this going to be a lower execution risk or a higher execution risk? And then when you start getting into return numbers, they vary depending on market conditions, but I think the last one we closed had a 2x equity multiple, so you basically double your money in 2 years. It had a little lower cash flow, and that was because it was being bought at such a deep discount, but it had very low renovation. So we knew the business plan was very low risk. So the numbers were very to market for a lower risk deal. Now, if I'm going into a heavier value add deal, which is a big renovation thing, then I might start saying, okay, well, yeah, I'm going to need a little bit more cash flow as this is going on to be comfortable because it's a higher risk. So it's just kind of a
mm,
risk relationship to where you're at and what returns you're personally getting in other investments and what you want from it. But as far as benchmarks right now, that's probably about if you're getting a 7% pref, 8% pref, and things like I think we had a 19.1 um, average annual return, and then I believe the internal rate of return was 15.6, so 16%. And
Okay.
I thought
That's
those were
pretty
pretty
good.
reasonable terms for
Yeah.
market conditions.
Not bad at all.
I was gonna ask, going back to when you first got started, would you say that the same strategies that, I mean, or strategy that you used back then to grow to where you are now works today? And could you explain a little bit about what that is, if you don't
Okay,
mind?
so my strategy is just really kind of whatever, because I've grown into this space, and going from my very first rental property and all the other dumb side hustles I probably had before that, but really just even from my first rental property, just doing the next best thing that makes sense. And generally it's going to make sense
Like, give an
because there's
example. Give an example of what that is. What was the next best thing that makes sense?
Okay, perfect. Yeah. So I went from a turnkey rental and student housing, and it had very low vacancy. It was easily predictable, so that was a good fit for me. And
Hmm.
then when I realized how well I was doing because I bought well, my next best idea was to start renovating them. And I
Mm.
knew how to build things, and I liked the work, but it was a lot of work. And I did it all, especially that first one, I was all sweat equity. And so that was the next best thing, was to go and buy a full-time construction job, and because I could buy better. But I also knew that I was going to be able to force appreciation in a very major way. And I
Sure.
knew it was going to be a lot of work, and it was a stretch for me at the time. And it was a stretch for in my construction skills too. And I remember actually it being up on a little roof, getting ready to drill through it so I could run an exhaust fan in the bathroom, because it was an 1890s building. They didn't have stuff like that in there. And I'm sitting there thinking, going, I'm about to drill through this roof, and I'm not 100% sure I'm going to do it right, or I'm going to be able to put it back together. But it's 2 in the afternoon. I think I got time to figure out, and I went right through there. And then that fan worked out really well. And so there was always something that was kind of pushing my limits that I was having to learn how to do. But really, just doing the next best thing that made sense to me, that it was generally going to make sense, but it was also going to push me a little. And just
Hmm.
being able to kind of bite the bullet and go for it. And it's just kind of like, man, I figured out stuff for so long. I think I'll figure it out. And then when
That's
you
cool.
start figuring it out, then it's kind of time to go and say, okay, well, next, what's the next? Even this is going well. What's the next
That's
Yeah.
best
right.
thing? And you just kind of
So
go, man.
it sounds like the next best thing generally sits like a little bit right outside the comfort zone. So it's like it sounds like a good idea, and it's also a little bit outside
Maybe I could
of
die.
where you're
I don't know.
super comfortable working, right? Like you're gonna have
Yeah,
to learn something. Yeah, I
yeah.
like
Don't
that.
don't go up on. Yeah, don't die while you're doing things, and don't be careful with 30-foot ladders, people. But it's generally always going to make you a little uncomfortable. And I know me especially. I'm always going to be having a little self doubt lingering. But I think
Hmm.
being uncomfortable in your endeavors also makes it a little more fun, and it makes you and it
True.
makes and there's always something new to learn when
Yeah,
you're pushing yourself, and it's energizing to me.
that's good. Do you are there any what would you say like new frontiers in the realm of commercial real estate that you're excited about? Maybe stuff that's coming on the horizon, just with changing marketing conditions, technology, supply, just whatever is out there that you think, hey, this is kind of a new thing that's coming up that is exciting. Anything like that from your vantage point?
hmm I'm very excited because I'm expecting increasing deal flow. Not huge
Okay.
deal flow necessarily by the end of the year, but starting to increase. And I've been talking to the operators I work with, and they're getting that feeling as well, that they're getting more
Mm.
looks at things, even if they're not penciling out. It's just a matter of time when you're underwriting deals. If you do a bunch enough of them, one will pencil out, and that's what they do. And then and they're a great example. In the last, I think, 18 months, they had underwritten two or 300 deals, I think it was, and they didn't get one to pan out for over a year. And so
Oof.
yeah, so discipline there on those guys, and they avoided a lot of sticky situations because they were disciplined. But they're also saying that they're starting to get a feel that their deal flow is going to increase, and I've heard that from other operators in other markets as well. And And so having more deals coming our way on the horizon is exciting. More opportunities. And
Good.
yeah, guys, let's be so that's for sure.
Since we're talking about deal flow and everything, what's the one book, podcast, or resource you'd recommend to someone who's interested in getting started in commercial real estate? And I ask because, you know, there's a bunch of different ways you can go. You can go multifamily, industrial, retail, that kind of thing. Where would you suggest a newbie who, ignorance on fire? I just know that I want to make money in commercial real estate based on listening to Eric Burns on the, Coffee Chaos and Cash Flow podcast.
Mhm.
Where do I go next?
Yeah, so there are two different books that I would recommend if you're looking to go passive and make that jump. Then definitely The Hands-Off Investor by Brian Burke is a great one. And if you're looking to go into operating or and to be an operator, or you're coming out of residential looking to go and try your hand at commercial, definitely I think the Best Ever syndication book is what it's called. The Best Ever brand by Joe Fairless was a great, and that's a playbook for when I was first jumping in. I think that was the first book I read, and I was sold after reading that. And it was just very actionable, very detailed. And Brian Burke's book is really good because it gives you a lot of ways as a passive investor, points you should be evaluating, and what a commercial deal looks like from the point of view as a passive investor. Yeah, and it gets into how to vet sponsors and how to underwriting directed towards a passive investor. So depending on what path, those are two definite books I would recommend.
That's great.
Nice.
You like fly fishing. Do you think fly fishing or analyzing deals requires more patience?
Ooh, and I like both of them, dude. I do like analyzing deals. I'll get lost in a spreadsheet. More patient. I think definitely fly fishing is more fun. I think probably fly fishing would take a little more patience.
Okay.
But I get stuck in a lot of trees too, so don't take my word for it.
Hey, I'm right there with you. So
That's fantastic.
As soon as you're having a good time, you just kind of lose. As soon as you're really having a good time and things are going easy, you get a little too aggressive and forget the trees behind you.
You're just like,
That's where it goes to me in the river, and so
awesome.
being able to untangle.
That's awesome.
where can if people want to learn more about real estate and learn more about you, where can they connect with you?
Absolutely. Go to flowerscapital.com and get the 12 pitfalls in real estate to avoid. And that should translate to both asset classes. But yeah, flowerscapital.com and grab that book. And it's a shorter article.
We'll link that here in the show notes so people can follow along and get connected with you there. So that'll be perfect.
Awesome. Appreciate it.
Yeah. Eric, thanks for joining us, man. Eric, too. It's so funny. Every time I said Eric, I'm thinking, well, we got two of them.
I know.
So
I have to keep overriding it in my mind.
Yeah.
Are you talking to me?
That was fun. I love the way you guys do your show, man. That was a fun one.
Well, thanks for joining us. It was great having you. I appreciate it. And, you're not far from us. You're only about an hour and a half away. We're down here in Lexington.
Oh, okay.
So
cool.
if you have any plans to come
Come on
down
over.
for Keeneland, come look us up. We'll meet you out for some races. And here coming up April.
Yeah,
we're
that's right. It should be spring meet soon,
spring
right?
meet. Yeah, right around the corner. No, we'd love to have you, and appreciate you jumping on here today.
I'm down. I'll hit you up for sure. I'll take you up
Let's
on
do
that.
it.
Good to talk with you.
Gentlemen.
Thanks so much. Appreciate it.
Yeah, thanks again. See ya.
Peace.
Cheers.